President Biden recently announcing expanded tariffs on Chinese imports. These include a 100% tariff on EVs, a 50% tariff on solar products, and a 25% tariff on Chinese steel and aluminum. Here's the latest on these tariffs.
China vowing to retaliate here after President Biden announced new tariffs on certain Chinese goods yesterday. These include a 100% tariff on Chinese electric vehicle imports, a 50% tariff on Chinese solar cells, and a 25% tariff on certain Chinese steel and aluminum imports. Yahoo Finance's Brian Sazi spoke exclusively to President Biden yesterday and asked about any actions China might take. Take a listen, and then we'll talk to the man that you see on screen right now.
The fact is, China already is what you might say way over their skis on this. What they'll do, I don't think it'll lead to any international conflict or anything like that. But I think they'll probably try to figure out how they can raise tariffs, maybe on products that are unrelated.
Okay, let's bring in Brian Sazi now. I mean, China has already kind of looked at this scenario and announced its own potential action that they would take if the administration does not step back off of what it had already announced here.
Yeah, I would say it's unclear precisely how China react. We've seen they've put out some comments, of course, some chatter on various social media channels, but it's unclear if they respond tit for tat. Remember that saying during the Trump trade war? Is it a tit for tat? So the U.S. comes out here, $18 billion in tariffs. Does China respond to that exact number, or do they go even further? I would even add, too, this might just be the opening bid or the opening start here for President Biden. Do they take this even further in an election year when he and his administration want to highlight what they're doing in terms of manufacturing and bringing back jobs to the country, whether it's in semiconductors or other important industries? So this may just be a starting point. And then if President Biden should win re-election, does this go even further? And then conversely, I mean, you heard some comments from former President Trump, who's been out there suggesting 10% across-the-board tariffs. We talked to a lot of economists. They're saying that would be really detrimental to the U.S. economy. He ramped up that rhetoric recently, saying, I think it was last weekend or earlier this week, 200% tariffs on China EVs, which is basically is a ban. I mean, it's not happening. But nonetheless, I asked President Biden a little bit more about China. He noted that China may just be really artificially propping up its economy. Take a listen.
China is fundamentally underrating their entire industries. They're just they flood a market. They pay whatever it takes to flood it. They make sure to put everybody else out of business and they take over. Or, for example, even if you want it for the longest time, if you want to do business in China, guess what? You have to have a 51% Chinese owner. You have to make sure that you're, in fact, going to make sure that they have access to the intellectual property. It goes on and on. It's about being fair.
We've been covering the economy for a long time. We've been doing this for a while. We hear a lot of leaders, CEOs, politicians talk about how China's dumping steel in the market or aluminum, but we also had the opportunity to talk to a lot of actual CEOs in the trenches, the CEO of Century Aluminum, for example, talking about how China has been dumping cheap imports or cheap products into this country, driving down prices. These are real things that are happening. And one stat that really blew my mind, there's only 4 smelters in the United States, or smelters make essentially aluminum. Now, Century Aluminum is building the 5th one, amid help from President Biden, the administration, various grants or loans. But that production has pretty much went overseas. To have 4 smelters in this country making aluminum, which impacts tin foil, it's just like, oh, I didn't realize that.
Yes, Saz, I'm curious with the conversations, because you talked to a number of the other officials within the Biden administration, a number of CEOs when you were down in D.C. yesterday. Great interviews,
Thank you,
by the way. But what did you learn just about their sense of what they're seeing from the consumer, the sense of how strong and resilient the economy has been, and how they are navigating this uncertain time here with their business?
I do want to couch this in saying I don't think anyone that we talked to inside the White House was going to say the economy sucks. It just wasn't happening. These were folks invited to the White House. They participated in the Rose Garden ceremony. It was a big moment for them. We got to talk to them off camera. But I didn't get the sense, just watching their eyes in these interviews, hearing how they're talk, that this is an economy falling off a cliff today, or likely to fall off a cliff a couple months or even a year from now. Was it gangbusters economy? Didn't get that sense either, but this economy, by all indications, continues to be growing. There's demand for steel, there's demand for aluminum. The world is not ending.
Now, President Biden announcing new tariffs on certain Chinese goods this Tuesday, including $18 billion worth of tariffs on Chinese electric vehicles. Beijing's foreign ministry representative responded by saying that China opposes the unilateral imposition of tariffs, which would violate World Trade Organization rules, and will take all necessary actions to protect its legitimate rights there. President Biden giving his thoughts on how he thinks China will respond when he spoke exclusively with our own Brian Sozzi.
The fact is, China already is what you might say way over their skis on this. What they'll do, I don't think it'll lead to any international conflict or anything like that. But I think they'll probably try to figure out how they can raise tariffs maybe on products that are unrelated.
For more on the fallout from yesterday's announcement and what impact it might have on November's election, we're going to bring in Terry Haines, Pangea Policy founder. Terry, thanks so much for being here. I want to start on your reaction to what the president was saying exclusively to Yahoo Finance about the idea that this is not necessarily going to boil over into a tit for tat with China. Do you agree with that?
Well, I think you can expect a tit for tat, Madison. The Chinese have never gone without responding to United States tariff action, and I imagine they'll continue today. That's really what the president said between the lines. So, for markets, I mean, what you've got here is a continuation of an existing regime. So, it's not really a big deal. In fact, it probably helps some stocks, autos, and the like. So there's that. But what you're looking at here is a long struggle, and I want to be real careful with markets to say, don't fall for the tariffs noise, which is relatively small. What you're going to see in Washington over the next year or two is a continued move towards shoring up the defense industrial base, and that's really what's behind a lot of the tariffs, politics aside.
So Terry, talk to us just a little bit more about that backlash, the risk here of an escalation. What exactly could that look like? What are some things that investors should keep in mind when we talk about how it could ultimately impact a handful of these U.S. companies here down the road?
Well, I would look at a combination of things. I would look at firstly market actions. The Chinese will either keep in place or increase tariffs that already exist. They might go an extra mile. I wouldn't know what that would be, but they will at least do a tit for tat, I would imagine. I think it's reasonable to expect that. And beyond that, I think you're going to see geopolitically, you're going to continue to see an upping of pressure in a lot of different places, including the South China Sea, where things are very tense, and markets, I think, don't understand quite how tense they are. I mean, we've got United States Special Forces on an island off of Taiwan right now, just a few miles from the Chinese mainland, and that plus the bases we've already got there, keep the Chinese themselves on high alert and more aggressive. So I think you're likely to see a ramp up in geopolitical risk, not just a market tit for tat.
I'm glad you bring up some of the tensions that we're seeing in the South China Sea. It brings up this larger picture of tension. Brian Sozzi was able to speak with the United States Trade Representative Catherine Tai on the importance of these tariffs in relation to some of those geopolitical tensions. Let's take a listen to what she had to say.
They're significantly out of step with the norms, the standards, and the rules that the international trading system has been built on, which is one that assumes and expects that markets and economies will behave on the basis of the logic of demand and supply. Instead, what we've seen from the PRC's economic policies and practices is a sustained and very targeted approach at establishing industrial dominance in sector after sector.
And it's interesting, Terry, we've also heard the ambassador somewhat switching course, saying that tariffs aren't necessarily inflationary. Do you agree with that?
No, I don't. Neither does anybody else. But she works for Biden, and you got to say that in the White House. The last thing you want to do is politically being caught saying that administration policies are contributing to inflation. So they'll continue to deny that, regardless of whether it's true or not. I also want to say a little bit more directly something that Ms. Tai is alluding to, which is that it's awfully rich that the Chinese are talking about violating trading standards set in the WTO. China today, and China for 20 years, has been classed as a developing economy in the WTO and has fought every effort to reclassify it otherwise. And the idea that the second largest economy in the world is a developing economy is kind of risible on logic, is risible in kind of basic verbal understanding. But this shows you how weak the WTO is and how much China's taking advantage of it. So the United States, from its perspective, feels like it has very little else it can do other than take unilateral action.
Terry, when it comes to this, a lot of people are saying that this is simply symbolic, this move here from President Biden. My question to you is this, obviously coming ahead of the November election. How much do voters care? And why or why not?
Well, I think, Shauna, I think an awful lot of the economic narrative is baked in. It's Washington's instinct to want to continue to try to do everything it can to actively help the incumbent, or the other campaigns will attack it. But the economic narrative here is pretty well baked in, which is that inflation is stubbornly high, and more importantly, prices are very high. That hurts the president a lot in a lot of states that he needs to carry, and it is a dynamic that shadows his campaign in a lot of those swing states. So, but it's very difficult. The idea, unless there was a big dive in prices, say 3 or 4 months ahead of the election, this narrative is not going to change, and it's not positive for the president.
Well, regarding the upcoming election, we heard from President Biden and former President Trump this morning that they're willing to debate one another. I'm curious, from your perspective, as we see the election start to heat up and become more part of the daily dialogue here, what impact does that have on some of these broader foreign policy moves from the current administration?
Well, it'll keep let me address it two ways. Firstly, it will keep the aggressive foreign policy stance from the current administration up. It will also, they will be perceived by the Trump people as trying to out-Trump Trump. So there will be a lot of tit for tat about toughness on China, toughness on the world economy, toughness on geopolitical risk. So, markets should expect that for the next 6 months. They should not discount it entirely, though, because there's the reality of this is, China policy is among the most bipartisan parts of the United States politics. So that will continue. It's not all just smoke. On the timing of the debates themselves, what is interesting is two things. One is that one takes place before the party conventions, the second after, and outside of the traditional voting. Presidential debates commission. Both of these main challengers see an advantage. Biden sees an advantage in making Trump look weak and all over the place, and hot-headed. Trump sees an advantage in making Biden look old and feeble and out of touch. And beyond that, both of them are succeeding in their own self-interest by keeping Kennedy out, whose third-party candidacy, I think, is descending into a niche candidacy, but they're still worried about the impact on votes. So keeping him out benefits both of them. That's what you're seeing.
President Biden today formally unveiled new targeted tariffs on Chinese goods. Yahoo Finance executive editor Brian Sassi spoke with President Joe Biden after the announcement was made.
Mr. President, thank you so much for joining Yahoo Finance. It's an honor to be inside the White House. So you and your administration have taken strong action against China. 100% tariffs on China EVs, 50% tariffs on semiconductors from China. Now, a lot of economists would say this could unleash inflation. How do you convince the American public that this will cause inflation, and why so targeted with the tariffs?
Look, China is fundamentally underrating their entire industries. They're just they flood a market. They pay whatever it takes to flood it. They make sure to put everybody else out of business and they take over. Or, for example, even if you want it for the longest time, if you want to do business in China, guess what? You have to have a 51% Chinese owner. You have to make sure that you're, in fact, going to make sure that they have access to the intellectual property. It goes on and on. It's about being fair. And look, it's about saving American jobs. Because if we allow them to continue what they're doing, to flood the market with EVs that are incredibly cheap. They're not making any money on them, deliberately doing it to put other people out of business. So we're going to protect the American auto workers, we're going to protect American steel and American aluminum.
Do you believe this will lead to retaliation from China?
Well, I'm sure China will talk a lot about it, but the fact is China already is what you might say way over their skis on this. What they'll do, I don't think it'll lead to any international conflict or anything like that, but I think they'll probably try to figure out how they can raise tariffs maybe on products that are unrelated.
Lastly, Mr. President, over 15 million jobs have been created under your watch. The unemployment rate under 4% for 27 straight months. The stock market at a record high. Why don't households feel wealthy right now?
Well, first of all, if you look at the report coming out of the Michigan survey, over 60% of the people in America feel they're personally in good shape. They're personally in good shape. But they look out and they say the rest of the world's not in good shape. Other people aren't in good shape. I think inflation has gone slightly up. It was at 9% when I came in, and it's now down around 3%. But the fact is that I think people are just uncertain. And that's why we got to be steady, stay the course, and continue to produce these incredible jobs. And by the way, the pay for the jobs are outpacing the inflation rate they're paying. We're going to be able to deal with this. It's going to take a little more time, but we're just focused on it.
Mr. President, thank you so much. We appreciate it.
Thank you, man.
Thank you.
Yahoo Finance's Rick Newman is joining us now with his takeaways on the China tariff news today. Rick, so the headline of your column, by the way, which I would urge viewers to check out, I think kind of sums it up. Trump called himself a tariff man. Biden looks like one now, too.
He does. Now, there's a continuum here, which is that the whole political world in the United States now is tough on China. I mean, it didn't used to be this way. I mean, this is not the way most people thought during the Obama administration, for example, when we were, competing with China, but we were enjoying all the cheap products that they sent our way. And that was deflationary, by the way. I mean, one of the reasons we had such low inflation for basically a 20-year period was all this cheap stuff from China and other places. That has now completely changed. And what Biden has done is affirm that this is a two-party pivot against China economically. Now, there are some differences here. So Trump did a scattershot approach with his tariffs, and he just basically put tariffs on, it was about half of all Chinese imports, which is way more than what Biden has done here. So Trump just put tariffs on this huge range. It was literally thousands of product lines. And Biden is like 15 product lines, and it really is targeted. You used the word targeted in the intro, it really is. And this does line up with other Biden policy areas, which is build out semiconductor supply chain here in the United States, build out green technology supply chains here in the United States. There are a few medical items on there because of what we learned during the pandemic, which is all this stuff came from China. We couldn't get masks and gloves. So Biden has said, well, we need to just build these assembly lines here in the United States more. So that's mainly what he's trying to do. The question is, are we done? Because we're now in a one-upmanship situation between Trump and Biden, and it's not hard to imagine that whoever wins, or even throughout the course of the election for the next 6 months, somebody might say, well, this guy did this, I'm going to double it, I'm going to triple it. We might see Trump coming back and sort of upping the ante.
Well, and for example, Trump has already said, well, he's putting a 100% tariff on Chinese EVs. I would put a 200%.
That's right, yeah.
He said things like that. Again, just as a matter of perspective here, the amount of goods being tariffed under the Trump tariffs was $300 billion.
Right.
The amount here is $18 billion. Right. And I know you've done a little bit of looking into the economic impact of the Trump tariffs. Talk to us about that and what the forecast is for the economic impact of these.
There have now been a variety of economic studies into the effect of the Trump tariffs. As recently as, within the last month, Goldman Sachs did a report on this because they're trying to say, well, we're going to have more tariffs. What happened the last time? There's just not any evidence that the tariffs were good for the U.S. economy. They may have been good for Trump politically, It's possible that he got a little bit more support than he would have otherwise gotten by convincing certain voters in certain targeted industries that he's looking out for you, the steel and aluminum industries, for example. But those tariffs raised U.S. prices. There are a number of studies that say that. And there was no manufacturing renaissance in the United States under Trump. There's just no, and that's what he said. He said he wanted his tariffs to do two things. Number one, he just wanted to reduce the trade deficit because he hated the number. The number was too big, but the number itself it doesn't really mean anything. And then he wanted to reestablish U.S. manufacturing, and there's just no sign that happened under Trump. It does seem to be happening under Biden. And not because of tariffs, but because of the bills that he has signed into law that contain incentives for building this stuff in the United States. That's tax breaks that go to the bottom line of private sector companies that start building these, green energy factories, electric vehicle factories.
But it'll take a while.
Yes, but we're already seeing the factories under construction. I mean, we've been talking about semiconductor plants in New York, in Ohio, and Arizona. Those are going to take a while to build. But the fact that they're getting built means private sector investors are putting the money in because the incentives that Biden signed into law make it more profitable for them to do it. So that when you see the private sector money being committed, that tells you this is coming.
How much do you think of this, and you hinted at this, Rick, is just raw politics in an election year, Biden trying to secure votes in key swing states?
Most to all of it? So economists hate tariffs. Most economists hate tariffs because they're inefficient. They create inefficiencies. So you're starting to get, the government is starting to help private investors determine where to deploy their capital, right? So you're changing the equation in terms of the return on investment in capital. However, there was a very real problem in the United States, which we now call the China shock. We didn't know this was happening as it was happening. But when we finally got the economists doing the research, it is very clear that all this Chinese manufacturing that happened starting when China came to the WTO, which is 2001, really did take millions of U.S. jobs overseas and did hollow out significant portions of the heartland, in particular the so-called Rust Belt. The data now makes it very clear that happened. And guess what? U.S. politicians did nothing about it. We had very ineffective policies in place. That there were some retraining programs for people when the factory leaves. They didn't work. And that's why Trump got elected. That is the number one reason Trump got elected in 2016, because he appealed to those people. He called it American carnage. When he said, make America great again, what he meant, or what those people heard, was bring those jobs back. That's not easy to do, and it might be impossible to do, but we've now got politicians in both parties are now going.
It is so interesting, Rick, that I think you were discussing that in that, correct me if I'm wrong, but you seem to be suggesting Trump was kind of a lone voice for a period in this criticism of free trade, or certainly one of the few. It is now consensus.
There are a bunch of areas where Trump had the right idea for the wrong reason.
Well, and
this is one of them.
What he did not result in bringing those jobs.
But I'm saying that
back,
criticism,
right?
That's correct.
But the point,
and it was even worse because China put tariffs on U.S. agricultural products, and we had to bail out our farmers because they could no longer sell stuff to China.
But don't you think, Rick, there was a shift in narrative there? Who was with Trump when he was saying that? That did seem to be a minority opinion at one point. That has now shifted, as you point out, a real one point where right and left seem to come together.
So I think Trump does have a knack for putting his finger on something that is wrong. So he figured out, he was right, that American carnage, that people reacted to that because they saw it all around them. The factories disappeared and there are no jobs left. People saw that, and he appealed to that. His prescription was wrong.